We are looking to find the best bang for your buck. So it's time for our 3 Buys into Bail retail edition today. And joining us with her trades is Gina Sanchez, Chief Market Strategist at Lido Advisors and a CNBC contributor. Gina, it's great to have you here. Welcome.
Thank you.
Well, let's begin, and this is good to get us in the mindset for next week. We'll begin with Walmart. Shares are up 14% so far this year, so decent, not great. The big box giant reports Thursday. Analysts are bullish. Credit Suisse upping its price target $10 to $180, citing their strong grocery sales and ability to handle a volatile consumer backdrop. Stock's at $161 right now. You like it, and you say it's not just a consumer story?
No, this is actually part of it is an e-commerce story. They put a lot of money in over the last few years into e-commerce, and it really they started to see some real returns from those investments in Q1, and I think those will continue into Q2. I mean, like 27% growth just in e-commerce. And Walmart is the kind of, down trade that in a mild slowdown does really well because people want to save money. And, I think, citing the grocery store sales also, those are the kind of staples that people need. And so we just see Walmart continuing to be kind of at the base of people's needs. And like I said, in a slowing economy, you tend to trade down. Walmart benefits.
It reminds me of like Maslow's hierarchy of need. Not quite the same, but if we had our retail version, I guess that would be your base. TJX, how about them? Those shares are up about 10% in the past few months. They're going to report before the bell on Wednesday. They're also generating some positive buzz because of the off-brand model and the inventory that they can rely on. Their earnings guidance for the second quarter was weaker than expected, though, because of inflation and margin pressures. What would you do with this one?
So this one we're positive on because some of those inflation pressures are actually going away. We saw that in the CPI numbers today. But also, this is a kind of value play. They've actually been guiding they've been giving weak guidance all year, and the company has the earnings have continued to outperform. Lowered guidance. The stock has continued to rise in the face of that lowered guidance because people like quality. Like if you really have to save money, going to an off-brand gets you higher quality stuff for a lower price. So this is an interesting value play in a slowdown.
And I'm very interested in your last pick here because you like Tapestry, and those shares are taking a hit this week. They're down 16% after announcing they'll acquire rival conglomerate Capri for $8.5 billion. The market, a little mixed on it, but you like this longer term, is that right? Even the stock, I mean, I look at this 10-year, it peaked like over 10 years ago.
Yeah. So this is a longer-term play. I agree. It's interesting right now, though. If you look at the higher end of fashion, there's been a lot of consolidation happening. And if you look at what's happening with this particular consolidation, you're bringing together brands like Coach, Kate Spade on one side with Versace, Michael Kors, and, Jimmy Choo on the other. And so this is going to be a massive brand. And the one thing is the CEO of Tapestry was actually brought on just after Coach acquired Kate Spade. And she really put that company back on track. And so she's proven her chops at consolidation. So if this entire space is consolidating, I think that she does actually have an edge. And yes, it's taken a hit because it is the acquirer, but you will probably see the total company emerge stronger as a result. And this is just a brand with these brands are brands with tremendous brand value.
All right. Our final one here, those are your buys. The one to bail on is really interesting because your larger theme here is that you're pretty optimistic on the U.S. consumer, but much more cautious on the Chinese one. Estee Lauder has been smack in the middle of this. The shares are down 32% this year on that sluggish economic recovery. Last quarter, they said they expect full-year net sales to fall between 10 and 12%. So is all the bad news priced in at this point? It sounds like you think no.
No, actually, I think that one of the things I think a lot of expectation was put into that Chinese reopening, and it has continued to get pushed out farther. It has continued to underwhelm, and I am not sure that we have really swallowed all of the potential bad news that could come from just a slower and slower reopening. We keep pushing out the expectations, but I think that it's actually going to be almost a non-event, whereas everyone is expecting that there is going to be a reopening at some point, and that it is going to be massive when it happens. That's what's not priced in.
Right. All right. Gina, thanks. We really appreciate it. It'll be a fun week, hopefully, sort of.